Today we will talk about some market ambiguities. Some indicators show inverse correlation, whereas in the past was the other way round. How not to get lost in this difficult environment we are finding ourselves at. Today we will get down rabbit hole of stock market, major indexes and crypto. So without any further ado, let's kick in. But at first, if you haven't subscribed yet to our channel, you may do it right now. And remember about chatting live if you wanna. Just the window is below the box. All right, so let's jump into intro. Okay, and as always, we are starting up with economy view. Let's get over to this. Okay, so what we have over here. At first, just look at this. Does Fed has an antidotum? That's the question. If Fed slows down, it symbolizes that something is likely to break in the economy. So presumably, if the Fed is pivoting this time around, it's not for a good reason. That will symbolize deteriorating fundamental picture. So that's not very optimistic outlook that puts up. But the question posed due to this, is that right now a reason to be buying the market? Where buying the market is literally buying a risk. Treasury yield is looming large. It shapes the economic outlook as much as it reflects it. Longer-term yields playing a key role in determining borrowing costs across the economy. They also heavily influence stock prices, with rising yields often causing stocks to fall, as for better returns investors getting simply holding ultra-safe government debt to maturity. So it's starting to reverse. The recent yields of bonds are dropping. But is it for good? Let's find out on the Fed's meeting next week that will be the event that will become a litmus paper of the economy. I think for now that it's premature to say that there is a Fed pivot and storm is over. Right here you have a 10-year Treasury yield minus 2-year Treasury yield, and that's exactly where we are, is this level of 80s. So we previously were at similar levels, right where we had this very strong rising inflation up to over 10% in US. Okay, so let's jump to next slide, and the greatest say central bank must stop. Recently Elon Musk asked what does he foresee for the economy, is that he sees headwinds. The bitter truth is Fed stayed too easy for too long, now totally misreading inflation, and they've tightened due to this fact aggressively into the highest debt construct ever. And they are not accounting for the lag effects of this rate hikes, risking they'll be again late to realize the damage done. Many elements, as you know, are cracking already. If you have wondered about labor market that been pretty stable on the charts, take consideration that many of those units that were depicted as market participants that have been counted up are taking very often multiple occupations. This is why we don't see major spike in layoffs gauges. So that's add up to not very not very optimistic outlook for upcoming months. Right now, let's jump to market outlook, and for this one, I would like you to discuss this topic. So the question is, where should we hide? So right now we are with the conditions that are not putting in favor growth stocks. If we just that's the one chart I wanted to discuss with you. So eternal struggle, growth versus value, showing us that right now we are somewhere we were at the beginning of this pandemic outbreak, when this value growth stocks right now to this growth stocks to value stocks ratio has literally resetted, and right now we are at 1.58. That is somewhat a fair value paying for value for growth. Sorry, but that time that may come may make not only grow but also value stocks less resistant to headwinds. We are right now in the environment where this pricing power of many companies are pretty strong. But how long may it remain? The question is. So that's the eternal struggle of growth versus value. You may put in a comment section below the video, what do you find for growth to be next? Will it decouple from this 1.5 to the upside or to the downside, or maybe it will just oscillate within the lower range? So the question is where to hide from this disinflation. So disinflation is taking its toll on average investor, what we've already noticed. If you're looking for a haven to hide from this ongoing storm, we can find that many of those industries, as medical equipment, semiconductors, consumer services, software retail stores, were pretty good during fall in this disinflationary periods. But we gotta know that a lot of the tech and services companies went public on the Nasdaq in the early 70s, when the exchange was created in 1971, and that's why many elements haven't been attached to this. So we need to be a bit skeptic to this chart I have just put out, but anyway, it giving us a scheme of what type of elements might be the biggest growers. Among them, there's eventually a tech companies, but as we've seen, it suffered to that extent that in order to rebound, we would need a much of a longer period of time. So let me know in the chat or in the comments below, what do you find? Whether it's still good to sit on a value stocks, or putting a higher bet on growth may bring you better profit in your opinion. Let me know. I will be very curious about the result of your stance. All right, so let's jump to the next element, that is Apple stock. Right now we are finding out that Apple is on the this side when it comes to RSI that it held throughout a recent time of since 2013. This RSI has been held pretty well, and right now if we break below, it will be kind of maybe even right downward to this hundreds, low hundreds area. So that's what I need to uh, make you aware of. Right now, we are in a not pretty easy environment to make the investment decisions. Anyway, if you're investing in a long-term uh, process, you might not be so picky, and just dollar cost average makes the job. So if you wanna just check out what's the chart tells you about it, let me get it through. So right here we have a we have a Apple chart, and sorry. So we have right here an Apple chart, and that's what I defined that Apple. If we break through this RSI that's been held throughout that many years, around 10 years, will drop round to 100 bucks. Just we are right now in a consolidation that is getting more and more tight, and in terms of ATR, we are in a kind of a presage of next stronger move. So if you ask me, Apple right now is the one of this market behemoth that is pushing everything forward. But if it breaks, it will entail almost everything. Okay, so let's get back to our presentation. So we are jumping to yes, this is growth value. Let's jump over to another very interesting element that I want to study with you is that CBOE equity put call ratio. So if you want to know, these are the spikes where the market is hedging against the drop the most. And we've seen that every time where the market is expecting that will drop lower, market makers has reversed the tendency and just played ping pong with retail traders. Retailers were positioning against the market where there was typically the wrong bet recently. Just look at this, how strong are the spikes of the hedges. So if you wanna just know my point, there is no free money on the market. Market is not an ATM, and market makers are most often taking opposite side of a trade. Just look at this element. So market maker buying from his client at the market rate and then selling at the same rate, that doesn't create a sustainable business, one that can continue to add value. The market maker temporarily has an opposing position from facilitating client one's ability to trade on the best rate. But he's not married to it. He would like to see another client showing up or a passive hedging order fitting as soon as possible after client one trades to neutralize his risk. So right now, if we just wanted to answer whether market makers will let this bear market come to fruition, right now my answer is not yet, as the hedging is too much. This doesn't pay to them to let it go through. So positioning suggests there is too much pessimism. It favors a year-end rally rather than a year-end crash, in my stance. Okay, so that was the one, and that's a right now that's the difference, or I would say even the this section between VIX and what the CBOE chart says. So right now we can find that on this one we have the index of fear. So when it rises, we always have a situation where with a high certainty we have a situation where we have a drop on the markets. So this time is somewhat different, where we are finding out by this positioning that this drop is low likely when VIX right now is rising. So that's the position, that's the environment where there is very difficult to find out what may happen next, and in such of a convergence, I would expect this market to just stabilize around this range until any of the dominant power will eventually occur. Right now, these are two factors that are literally against each other, and it's very interesting to watch which eventually side will win. We are jumping out to Bitcoin. Is Bitcoin dead again? So that's the question that recently was also looming large when the market is going through the cycle lows. Many disbeliever entities throw a bucket of water at all the cryptocurrency space, and this was at first quite a dicey projection of European Central Bank, but it's kind of it lacks with arguments. Right now we can find that ECB is the one that literally had a very scant of arguments to make some that projections they are wrong that many times, that in terms of crypto, that I would say there are just the father. So if you want to put this like that, they need to slash that industry, as if this is a main competitor of central banks, where middlemen are the ones taking profit out of thin air, that doesn't pay for them to promote this sector. So in my opinion, Bitcoin has never been used. Yeah, that was their argument, that Bitcoin has never been used to any significant extent for legal real world transactions. I would say that's a shame on ECB. They haven't done their homework, it looks like. For instance, Iran makes first import order using cryptocurrency back in August 2022. And they said that the use of cryptocurrencies and smart contracts are getting more and more widely used in foreign trade with targeted by sanctions countries. And what about the second element, that Bitcoin transactions are cumbersome, slow and expensive? So we are finding out that's also not true. Yes, we had problems with these elements of higher demand where Bitcoin was throttling, but what about the Lightning Network? Bitcoin was born in 2008 as a payments tool aimed at eroding government control over finance and economies, and it has no CEO. Nevertheless, is unwinding thanks to its developers' charity hands that believe in real money evolution. That's absolutely astounding. Right, right. So let's have a look at Lightning Network then. So the Lightning Network is a layer 2 payment protocol, layered on top of Bitcoin, and it's intended to enable fast transactions among participating nodes and has been proposed as a solution to all the Bitcoin scalability problems. So this chart shows an cumulative Bitcoin capacity across all channels. Lightning nodes open payment channels with each other data funded with Bitcoin. We are right now finding that this line with a short-term plateaus is hiking in an abrupt pace. So when transactions are made across those channels, the channel balance is reflected without having to broadcast a transaction on chain, and that is what is preventing the chain from throttling. So that's absolutely the thing that cheers this community of Bitcoin the most. So I think that's the solution that may expand network capabilities even more. So ECB, let's please be more diligent in your work. Market mover section, and that's another thing that right now is very important because it's Friday. We have very important data yet to discover. So we are jumping out to economic calendar, and on Friday we had PPIs. Oh, it haven't. Yes, we have PPI that was as forecasted. So we do expect that due to this PPIs, inflation PPI has been stable. That's the kind of a leading indicator that has a forecasting feature of what consumer price index of next week might become. So that's important for Fed. That gauges are pointing that we are more likely to rather remain at this 0.5 point projection. If we just oh, sorry, that's not the one thing I wanted to discuss with you, but let me find out this Fed probability rate and countdown. So that's at CME grew over the come. We have 5 days left and still 75% of chance of hiking interest rate by 0.5 points. So the market is stable with its statement. So that was a that element. Right now, let's jump to market mover section, and within this we are getting through and kicking on to trade idea. So in terms of trade idea, I do have for you, let me find out. I have for you US 100 right now. That's the kind of a loose proposition, as US 100 has reacted to the level I wanted to attach for you as a proposition of a trade earlier than I expected. So US 100 right now is most likely to revert back after this PPI's gauges to those levels of 11.6, and I would expect this one to slide downwards, slide downwards without crossing this recent, without getting above this recent resistances. So, but it of course depends on how the price action may look like. So in my opinion, US 100 right now is in a decisive point, whether it goes to the previous support or trying to test out once again the resistance. But due to this very strong impulse been made, I would rather expect this chart to revert to these levels of 11.7 around, and then revert back to 11.4. So in terms of trading box, I would watch US 100, how it will behave around this area right here. Okay, so that's it in today's episode. Thank you very much for watching. If you have any questions, just put it in the comments section below the video and let me find out whether you had some questions on the chat live. There are not, so I wish you happy weekend, a very good time with your family and friends, and we are seeing each other on Monday, 8:45 9 a.m. East time as always. So take care of you and bye bye.